Gold prices in US dollar terms rallied Monday after making the biggest one-day drop in a year, with market experts describing that 2% plunge as overdone and technical selling overkill on news that China's central bank didn't buy any gold in May, writes Atsuko Whitehouse at BullionVault. Euro gold prices, meanwhile, moved higher, rising back to start June levels, as the weekend's big gains for far-right parties in the 2024 European Parliament election, most calling for lower immigration and the rollback of green energy rules, hit the union's currency, equities and bond prices. Gold priced in euros rose 1.0% on Monday to €2,143 per troy ounce, as the official currency of 20 out of 27 European Union member countries lost 0.6% against the dollar to its weakest level in more than a month. While centrist parties retain overall control in Brussels and Strasbourg, the AfD took second place in Germany. The Brothers of Italy cemented their dominance under Prime Minister Giorgia Meloni, and Marine Le Pen's National Rally took one-third of the votes in France, followed by centrist President Emmanuel Macron, calling a snap election at home. European equities fell hard on the result, led by banks BNP Paribas and Société Générale tumbling more than 8%, while yields on France's 10-year government bonds hit the highest level this year at 3.2% per annum, as the debt, already downgraded at the start of June by ratings agency Standard & Poor's, fell in price. Spot gold bullion prices in US dollars edged higher by 0.5% to rise back through the $2,300 level after hitting one-month lows on Friday, down $100 as the weekend began after hitting two-week highs that morning. Friday marked the biggest one-day drop in gold since mid-May 2023, as stronger-than-expected U.S. jobs data followed news that the People's Bank of China didn't buy any gold bullion for its official reserves in May, the first pause in 18 months. Headlines surrounding the unchanged reserve levels at the PBOC were overdone, says analyst Rona O'Connell, bullion specialist at brokerage StoneX Group Inc., adding that the market's shock response was based on premature suppositions, given that China's central bank gold buying and holdings have frequently been kept quiet in the past. Friday's drop was probably driven by technical selling to the extreme, says Bruce Ikemizu, chief director of the Japan Bullion Market Association, analyzing the charts of Friday's drop. Selling led to more selling. It feels like overkill. Ahead of last week's price drop, hedge funds and other leveraged speculators in COMEX gold futures and options increased their net bullish bets on gold by 0.9% to the highest level in 4 years. In contrast, speculators cut their net bullish bets on silver by 9% from the highest level in 2 years, according to data published by the U.S. regulator, the Commodity Futures Trading Commission, CFTC. Managed money traders also reduced their net long positions on platinum by 29% and built a fresh all-time record net short position against palladium prices, finding over 4/5 of its end-use demand from auto catalysts to reduce carbon emissions from gasoline engines. Palladium today rallied 0.8% to $922 per troy ounce, regaining less than a quarter of last week's drop. Platinum, which derives 2/3 of its demand from industrial uses, primarily auto catalysts for diesel engines, edged higher by 0.3% to $975 per ounce after plunging 6.4% last week. The price of silver, now finding nearly 60% of its annual demand from industrial uses, meanwhile jumped 2.1% to $29.77 per ounce on Monday, rebounding from last week's 3.2% drop. Like a lot of people, I was stunned to hear the president decide to do a dissolution just before the games, said Anne Hidalgo, socialist mayor of Paris, host to next month's 2024 Olympics, of the end-June vote, and then the 7th of July runoff called by Macron after the EU Parliament results. It's really something that is extremely unsettling. The UK is already scheduled to hold a general election on the 4th of July, with Keir Starmer's Labour Party consistently ahead in the polls after 14 years of Conservative rule. The gold price in UK pounds per ounce today edged higher by 0.6% to £1,813 following Friday's £60 plunge to a 2-month low. Before then, the Federal Reserve's June policy meeting concludes on Wednesday, the same day the latest US Consumer Price Index will be published. Expected to make no change to interest rates, Fed policymakers will update their dot plot forecasts for interest rates after repeating their consensus prediction of 3 rate cuts by the end of 2024 at the March meeting, even while holding the cost of borrowing at its highest level in more than 20 years. The odds of a September rate cut have now dropped to less than 50% from 60% a week ago, according to the CME's FedWatch tool. Please like this video and subscribe to our channel.